Hi, I'm Segun Lawson. I'm CEO and President of Thor Explorations. We're a West Africa-focused gold producer. We've just built our first mine in Nigeria, where we're on track to produce between 95 and 100,000 ounces this year. And we've got a second project in Senegal, which we're advancing through exploration.
Segun, good to see you, mate.
Nice to see you. Nice to be here. I'm very well, thank you.
You've been doing the European tour thing.
I have been doing the conference circuit, and yeah, it's been quite enjoyable getting the story out there and meeting people who haven't heard of Thor yet. And I'm pleased to say it's been pretty positively received.
Well, should be. Not too many people building mines in this current environment. So a year ago, first pour, pretty much hitting the numbers you want?
Yes, so we poured first in July last year, and then obviously had the ramp up. A couple of teething issues, but since December last year, we've been producing commercially. We had a great first quarter this year, and encouragingly for us, there have been improvements quarter upon quarter since Q1.
Yeah.
And we should hopefully end up at the upper end of our guidance, which is between 95 and 100,000 ounces this year.
Now that's ongoing, right? I always say to people, mining's tough, but mining's been especially tough for the last 18 months. Cost environment has been fluid, we'll call it, and fluid on only going upwards. The costs are rising. How have you managed that?
Yeah, look, we've been exposed to the costs as well. But one thing I have to say is, our mine is quite unique in a number of ways. It's the only gold mine in Nigeria. In Nigeria, you have a lot of compressed natural gas, which is an alternative source of fuel. We switch from diesel to compressed natural gas. That brings our costs down in terms of reagents. That brings our costs down in terms of energy prices. In terms of reagents, we've been very fortunate with the ore body. About 70% of our recovery is just from gravity alone, which brings the reagents cost down as well. And then also forecasting forwards, we've been purchasing ammonium nitrate and spare parts in larger volumes 7 months in advance, just to avoid the volatility in that 7 months of the price shocks.
It's kind of interesting. It's careful management and sort of tweaking these variables. You kind of got lucky, and you made some good strategic moves in that sense. But at the end of the day, you produce, okay, let's say 95 to 100,000 ounces. You should be a $500 million company. You're not, right? Right? Yeah. So what's happening there?
Look, I think first of all, it speaks about the market and the sector as a whole. Everyone's going through it, undervaluation. But secondly, we're also a new name, building a first, or should I say, having built a first of its kind project in a jurisdiction where it's never happened before. And then thirdly, I think if we keep delivering at the end of the day, and we keep producing the numbers we're producing and rapidly paying down our debt and transitioning to free cash flow, I think a re-rating will happen at some point, particularly when this cyclical business of commodities goes into an upcycle.
Yeah, okay, yeah. We've cycled into a moment in time. We're hoping we cycle out of it relatively sharpish. But let's talk about some of the base numbers. For people new to this story, I want to introduce some of the baseline numbers that they should be looking at. Okay, we've talked about the amount of ounces you've got. Let's talk about life of mine and the cost of those ounces.
Yeah, so we have a life of mine currently for about 5.5 years.
Right.
We pretty quietly confident we can extend that because we have a larger resource than reserve. We have an all-in sustaining cost for the life of mine around about $700 per ounce. Wow. We have our all-in sustaining cost of this year, $850 to $950 per ounce. We have our all-in sustaining cost over the next 2 years of around about the same, just under $900 per ounce. Right. So we think there's a very good margin at today's gold price, and we think we should be generating a lot of cash. Right,
and you're paying down debt. You paid off 50% of the debt position, leaving you with what? How much debt at the moment?
So we have about $28 million of senior debt left.
Okay, yeah. I want to talk. I'll run through this because I think it's important to kind of keep this really simple for folk to understand how good the potential of this thing is. Right, Senegal will come to in a second. Right, we've got 5.5 year life of mine, so priority number one, you've got to get that to over 10 years life of mine. That's the kind of magic number people kind of think of. So how do you do it?
Through exploration, and to understand why we're quietly confident, you have to understand where we've come from. We've come from a situation where we were exploring with a very limited budget. We drew a line in the sand where we knew the economics were very compelling. We've managed to fund the project, build it, and generate this cash. Now, in our first 9 months of our first calendar year, we've paid back half the debt. We can either...
You're obliged to, or have you chosen to?
No, we were obliged to. It was a very front-ended financing facility that was put in place. Now we're in a position where if we stick with the current financing, we can be completely debt-free this time next year,
Right.
or we can restate that debt over the next 3 years and pay $9.4 million a year. Either way, there are benefits to both, but I mean, restating the debt to $9.4 million then frees up even more cash flow for exploration. And that's where we think, the mine life extension would come from.
Right, obviously, so refining that out gives you a bit of flexibility, and I guess because you have delivered and there is cash flow and the track record paying down, you should be able to do that without it costing too much. So that's an option for you, how to play that. But currently, you haven't made the decision yet, how much are you allocating to exploration? How many meters does that convert to? What could that mean in terms of bringing ounces into the resource?
Okay, so currently we have a first pass of about 7,000 meters.
Yeah.
So it's 2 programs. One's 4,000 meters and one is 3,000 meters. The 3,000 meter program is dedicated to going underneath the pit and extending the underground. We've only drilled down to about 280 meters. We have identified a number of high-grade chutes. We're doing infilling around that. We think, there's a high potential of extending the mine life by introducing underground ounces to supplement the open pit. That underground drilling has actually started.
Right. So grades, remind people of the grades.
So the grade for the existing underground resource is around about 7 grams per ton.
Right, okay.
The highest grade intersections that we're drilling in the underground, in some of the chutes, are about 4.5 meters wide at 18 grams per ton, 4.5 meters wide at 15.5 grams per ton. And we have some 8 gram and 10 gram chutes as well. So the grade is certainly higher.
Yeah.
The tonnage isn't quite what we have in the open pit.
Right.
But it's all about finding, a larger critical mass to supplement the open pit.
Well, so after that contained metal and those sorts of grades, I think underground wise should be good. You'll be making money.
Yes.
At those sorts of levels. Right. So only 7,000 meters doesn't sound like a lot, right? So again, how do you envisage next year going in terms of your ability to start making decisions around targeting of where you're going to drill, how much more drilling you do, and how quickly you do that?
Yeah. So now we're in production. Maybe I should have explained better. Apologies. 7,000 meters is the first pass.
Right.
At the 7,000 meters, we all sit around the table. We say, these are our new priorities.
Right.
What's the next phase? So now we're in production. Drilling is just an ongoing process in parallel with our production. It's not a case of getting a budget for a particular program. The fact that we have
your own cash flow.
Yeah, we have our own cash flow. We have we haven't inherited any data to build a program around. We just do it step by step, incrementally on the targets we've generated, and the first pass for those targets is 7,000 meters.
Right, and so in terms of retained skill set, right? Okay, from where you've come from, you're mine builders, you're now operators. The exploration team are what, legacy people have been around?
No.
New?
We have an excellent exploration team,
okay.
and they have such knowledge built up over the last 6 years in Nigeria.
Yeah.
They understand the geology. We've mandated structural geological reports. For the first time, we're doing a significant ground mag exploration, using that as a tool as well. So the team is there. It's composed of. In fact, it's led by all Africans from Tanzania, from Ghana, from Nigeria, and they're doing a great job there generating these targets.
No, bet. Okay. So, right, you know the goal, as far as the market's concerned, I want 10 years life of mine from you.
Yeah.
I want you to kind of keep those costs to, the numbers you're delivering at the moment is good. If you can sustain that, you're going to go underground. Does that mean there will be a capital expenditure requirement for that? And if so, what's the timing on that? Or you have to go to market, or are you going to self-fund?
So from the studies we did in our preliminary economic assessment, the capital requirement was $12 million to put a decline in from the bottom of the pit.
Yeah.
We can fund that from our own cash flow.
Sure.
We're hoping to do that as early as 2024 and supplement the open pit from then going onwards. We have that, and then we obviously have lower hanging fruit in terms of CapEx requirement, which is hugely dependent on the success of the drilling of the satellite targets.
Yeah.
So any satellite targets we find are hugely materially beneficial to the company's MPV because there's no real CapEx requirement. We're looking at building haul roads to the plant.
Relatively short distances.
And we're not talking big distances.
Right. Okay. So I guess all that helps. So we will follow that bit and see if you keep delivering and keep hitting those numbers quarter after quarter. That's what we want, success. But you've got the second asset. You put out some numbers recently. It's earlier days, obviously. So what's the ambition there?
So that second asset, we got to our first major milestone last year, which was a maiden resource, and that came in we're very happy with where we landed, 730,000 ounces, grading at 1.5 grams per ton. We noticed in that program there were a number of high-grade structures within the resource, which we felt if we drilled around and we got some grade, we could pick up the ounces and the grade. It's been very successful so far. We press released our results last week. We're getting intersections up to 13 grams per ton, 8 meters wide and 9 grams per ton. So we're very happy with that, and we've got more results coming in. We would have liked to, as we said to the market, update the resource this year, but every time we've drilled, it's been a good dilemma to find more gold. So we've extended that program through we're drilling through to the end of the year there, and we will update our resource in Q1 next year. The plan, straight after updating the resource, we'll do our first economic study there. And that'll be the first time the market can really start putting a value on this project.
Right, but why rush into it, right? We're sort of seeing, again, because of the market pressures, companies delaying that process, delaying getting into the economic study phase because it can signal in the cost and inflationary environment, the CapEx numbers are crazy. We've seen companies go from, what 68% IRRs down to 25% IRRs. We've seen cost overruns of $150 million just going from PEA to PFS stage. It's like I said, a very fluid environment. People are very nervous of doing that. Plus, 1 million ounces used to be okay. 2 million ounces is slightly more flavour of the month, and if you can hit 3 million, all of a sudden everyone's interested in this thing. So why rush to get into the economic study phase?
I think it would be good to get to that milestone for our internally as well, knowing that, look, we have this project which has zero value in our share price at the moment. To basically to demonstrate some economics to ourselves and also to our shareholders. I think they deserve that.
But does it signal other kind of intent, like you'd flip it out or sell it or something, or is it?
No.
Because you can do those numbers yourself internally, right? You don't need to go through economic studies phase to start.
I think we do, because we're a growth company. We are generating 100,000 ounces in Nigeria annually. We think back of the envelope, we can do something similar in Senegal, 100 to 150,000 ounces. We see ourselves in a situation where we have the mine building experience. We've just successfully built a mine in Nigeria. We have an EPC contractor who's also a shareholder that we get on very well with. Our largest shareholders are Africa Finance Corporation, so there's access to capital if required for CapEx. Why not repeat what we've done in Nigeria and Senegal when it's not too far away? And the first inkling as to whether or not we can do that is to understand what the economics are and let our shareholders know that these are very deliverable economics. So we think it's hugely beneficial to go down and do this first economic study.
Okay. And with the intent to maybe kind of get into production quickly too. Because, again, typical, if you look at North American companies, they're like, we need to get to our 2 million ounces, and then we'll kind of get into production at a point much, much further down the line. Partly because they don't actually want to ever get into production. They want to make it someone else's problem. You're not frightened of that. But they're also delaying any revenue. That's a problem in terms of, they're going to have to keep raising money. It's dilutory. No money's coming in when it could be. Maybe that's the wrong strategy. You're not frightened of that kind of short term?
That's not our strategy. I hope, as we've demonstrated already, we've built a mine, we're generating cash. We intend to also return cash to shareholders. I'm a significant shareholder myself with skin in the game. I'm aligned with shareholders. We have absolutely no intention of raising any dilutive equity. We believe we can self-fund this. We believe now we're generating very strong cash flow out of Nigeria. Getting leverage to build a project is very realistic as well. So, no, our aim is to increase our production. Our aim is to continue the growth of the company. We believe it's beneficial doing it, diversifying ourselves by jurisdiction, also diversifying ourselves by stage of development, completing a mine and having a team in Nigeria that's built a mine and moving forward at the right timing to do the same in a different jurisdiction. All delivers very good value to shareholders.
No, I get it, but it's sort of like old school mentality. My banking days would have been 10-year life of mine. I'd say uninvestable. You went and found some alternative financing. It felt a little bit expensive at the time, but right now it feels cheap, right? It felt like a good thing to do because it got you going. And because you're going, I suspect it'll be a little bit easier to raise capital for Senegal, depending on what you do and how you come at that. And I know I'm asking this next question of you every time I see you, because I get a little bit excited about when I see people delivering mines, building mines. It's old school, delivering cash. Is in the current environment where everyone's just a little bit nervous, people are struggling to get into the market, raise the capital, etc. There must be deals to be done. You must be looking around. One eye on other stuff.
Look, where, like you say, in this environment, there's a lot of stuff coming across our desks. We initially thought we'd start looking at some early stage projects that we could advance slowly. But interestingly, it's probably a sign of the times. There are a few projects that are further down the development path that have been, have come across our debt. To say we're actively looking isn't accurate. We have a real focus on paying back our debt, delivering to shareholders, and extending the mine life. That's the priority of what we do. And then after that, and that's not too far away. I'm just talking over the next, 6 months, the next 2 quarters. After that, the cash then starts building up very quickly, and then I think that's when we're in the strongest position to look at deals.
Right. And okay, do you have any kind of shorters in the stock? Anyone shorting your stock?
Not that I know. Not any major shorters. No.
Right. Okay. Yeah. Which is interesting in itself, because I'm looking at share price. I'm trying to why it isn't kind of kicking on. I get that it's a tough market, so the fact that it's not heading south is really good news. But it's kind of heading sideways a bit. You're not getting credit. So some of the stuff we've talked about today seemingly would be, and the things that you're addressing in terms of life of mine and in terms of getting the second asset up and running, etc., would seem to be some of what they're looking at for you to kind of deliver on. Is there anything else that you think you're a little bit nervous about when they think of Thor?
No, look, I think Thor is a first of its kind project in Nigeria.
Yeah.
Yeah. Metals mining, not just gold.
Yeah.
So the conventional institutional investors in North America, here in London, have never invested in a gold mine in Nigeria. And obviously there's going to be that apprehension to start with, to be the first. We like to think that, we've delivered above what we promised for 3 quarters in a row, and hopefully the next quarter as well. But at the end of the day, we can look back and the numbers won't lie. If at the end of every quarter we're generating US dollars, it's only a matter of time before that re-rating happens. All we can do is continue to say what we intend to deliver and deliver it, and show the growth in Nigeria and in Senegal. And I also think, in addition to that, we've had some long-term shareholders who've been in, for 7-8 years, who are taking the opportunities. I don't know if they're having losses elsewhere to exit every time there has been an increase in share price, which has meant, like you say, the price has gone sideways. But there's only so long that can go on, and I think in a matter of time that will all be gone as well. So we keep delivering what we say. We deliver growth. I think next year would be fantastic in terms of share price performance. I hope anyway.
I hope so. Segun, really good to hear the story, and well done.
Thank you.
The numbers don't lie. Keep doing it, okay?
Thank you very much.